Medicare?
Nothing.
Nothing. Okay.
Me neither.
Okay. So, you know, to create kind of a bright line difference in the way the government thinks about this and the way the rules are written is SSI and SSDI are kind of financial support that the government gives you in order to survive, to sustain. And Medicaid is the health services that you need. And the rules are actually very different in the way that they're tailored. You know what I mean? The government's all about you going to work, you know, and, you know, go to work, please pay taxes, please be an active member of society. Sure, you need a little help for Medicaid, you know, we'll figure it out. There's a lot of rules that allow you to work for Medicaid. With SSDI and SSI, it's a little bit different. You know, they feel like if you can go back to work, why do you still need this financial support? Or why would you need this financial support? So the rules are a little bit stricter. So I'm going to start from, I'm sorry, my back is hurting today. I'm going to start from the back a little bit. SSDI stands for Social Security Disability Insurance. It's literally an insurance company, an insurance program where when you get hurt, when you sustain a disability and you're qualified, you know, certified disabled by the Social Security Administration, they look basically at your past earnings and they decide what your lifetime earnings would be and they give you that. And they provide you with that until you either retire and then change, I mean, until you get 65 or until you are no longer disabled. So the amount that you get through SSDI is based on your past work history. There's a formula, we're not going to get into it, it doesn't matter for this purpose. Now you will continue to receive SSDI as long as you do not perform what's called SGA, or substantial gainful activity. That is, for the purposes of SSDI, that is what it's all about. Also, when you're on SSDI, you automatically get Medicare and things like that. I mean, whether you're working or not, there's always going to be a way for you to maintain Medicare, and I'll touch that towards the end. So, what is substantial gainful activity? So once you start performing work or SGA, and I'll keep using SGA just to keep it short, you no longer are eligible because you're not disabled, you're working. The simple ways that the government calculates what is SGA is 2 bright line rules and then like 3 or 4 not so bright line rules. The bright line rules are if you make more than $1,040, it changes every year. In 2013, if you make more than $1,040, then that's considered, no matter what you're doing to get that money, that's considered, you know, SGA, and you're not eligible for SSDI. Now, I'm sorry? A month. I apologize. Yeah, $1,040 a month. If you make more than that, you are no longer eligible. It doesn't really make it. If you're making $1,035, it doesn't really make a difference. Your amount of SSD doesn't change, which is why this program is a little different from SSI. And SSI, if you're making some money, they have a formula to deduct, you know, change the number. SSDI does not do that. You know, if you're making less than that, you're eligible. If you're making more than that, you're not eligible, and you're done. So that is probably the most common way people understand SSDI, and you know, and how you can maintain it. And nobody ever wants to make more than $1040 a month because they don't want to lose their SSDI. Now, there's a few other ways that substantial, you know, SGA can be calculated. I'll talk about those. Then I'll talk about, you know, all the incentives that exist inside the SSDI program to allow you to work. Other ways that the government looks to see, you know, what if you're not making income but you own a small business? Or what if you are working but not getting paid? You know, so some other rules are, if you work, whether you're getting paid or not, for a small business or for yourself or for some, even if you're volunteering technically, more than 80 hours a month, which is 20 hours a week, that also means you are able to perform SGA, substantial gainful activity, and you again would be, according to their tests, not eligible to continue your SSDI. So, you know, when I go into some examples in a little bit, I'll explain why that 80-hour rule is kind of interesting. You know, in small businesses, it's very difficult for the government to figure out exactly how much your ability to work is, or how much your value is, or how much you're making, because you can own a small business and not pay yourself $1. You know what I mean? So there's several other tests that the Social Security Administration uses to figure that out. I'm going to glance over them because they get a little bit technical, and like I said, I can talk for 3 hours about this. One is
I won't let him. I promise.
you know, I actually need a time check on myself. To be sure.
Alex, there's a clock to your upper left there, if you want.
Upper left, there we go. Yeah, I knew that. So, the 3 tests basically, one is if you're adding a very significant amount of, substance to any given business, they have different formulas where what is significant is calculated. And even if you're not paying yourself, but you run a huge, large business that, produces $1 million revenue a year, but you don't pay yourself, that would be considered SGA. And the reason why they look at the time and they can't use the money aspect is because for SSDI, I should have mentioned, there is no resource test. You can have $5 million in your bank account. You can own a business worth $10 million. None of that will affect your SSDI because there is no means and no resource tests for the SSDI program. So it makes no difference how much you have. It's all in the world of SSDI. It's all about income and your ability to work. So again, if you were running $1 million business and you weren't paying yourself, you still would be ineligible for SSDI based on the significant activity test.
But you can't own those assets?
You can own those assets. Like I said, for SSDI, there's no means or resource test. So you can own 17 houses and be a multi-mega millionaire and still be eligible for SSDI. You just can't work. So again, you have to. You would run into problems. Let's say you had a small business and you transferred all this stuff to yourself personally. You may not get into problems with SSDI, but you could very well get into problems with the IRS. You know what I mean? You have to explain how these, why would you take assets from your business and give them to yourself personally? Because you're not supposed to cross that. That's SSDI doesn't regulate that. That's just good old IRS and legal principles. But if you kept all that stuff in your business, you don't have a problem. Like I said, even if you own a $5 million business, you're totally fine under the SSDI rules. Except for the fact if you're working there, if you're doing substantial things, you become ineligible. The next test is what they call the comparability test. It's if you're doing the same things that an able-bodied person is doing. So let's say you're a big-time salesman and you're able to perform great sales duties, and somebody with able-bodied is doing the same exact stuff that you're doing, although it may not be considered significant to the business, in that role and capacity, you're also become ineligible. So the list of ways you can become ineligible is pretty long under SSDI. One of the interesting ways, there's a lot of cases like this. There was once, the most famous legal case on this topic is a school bus driver who was actually making $900 a month under the SSDI program. He continued to drive the bus, and he was making under $1040, and the SSA, Social Security Administration, still brought a case against him to say you shouldn't be receiving SSDI because you're working. It just happens to be that you make so little that that the money's not there, but you're working 20, 30 hours a week. You're doing exactly what other people in the school bus driving industry are doing, so there's no reason that you need this just because you're under 1040. And sometimes they don't play that game a lot, especially not with people who are in wheelchairs, but they can. So if they have a way of proving that you're doing a lot and stuff like that, you may lose your SSDI as well. So there's another test called the worth of value test. I'm not going to get into it too much. It's where they try to figure out how much, based on what you're doing for a company, how much would those services be worth if they hire somebody to do it? If those are worth more than 1040, again, you're not eligible. So, that was a lot of detail there. So, going to the incentives that the SSDI program has for you to work. Basically, the SSDI program has what's called the 9-month trial period. So, if I decide to go to a law firm for 9 months, I don't receive SSDI, but let's say I did. Basically for 9 months, I get a freebie. They're called trial months. You get 9 trial months to test your ability to work. So I could be making $10,000 a month next month, but I will still be receiving SSDI because you get 9 months where they don't check anything, where you tell them I'm going to work, I want to work, I want to try to work, but I'm not sure I can work. They go, okay, take 9 months, figure it out. You know, and you can do whatever you want. Once you run out of trial months, that's when things start to count. Now the way it works after you run out of 9 months of trial is you get what's called the 3-year extended eligibility period. What that means is during those 3 years following your 9-month period, any month that you make more than 1040, you do not get SSDI benefits. Any month you make less, you get SSDI benefits. So you don't actually have to, what makes the process nice is you don't have to keep reapplying or losing. You're actually still part of the program. They're just monitoring your income on a monthly basis. So you can make as much as you want. Let's say you get sick, you lose your job, you become automatically right back onto the SSDI program for 3 years. Once that 3-year time frame passes, you get you're terminated from the SSDI program and you're out in the world living freely. If you lose your job and you're still disabled, you would have to reapply for the SSDI program.
How long does that take?
That takes a few months, and there's a 5-month waiting period that you have to wait to show that you're disabled. They are working on, there is an exception, I don't want to say that you're going to qualify for it, where like even after the 3 years, you get another 5 years where you get expedited reinstatement. So there's a few different ways. They're trying to do everything in their power to make you work and feel safe, like you can come back. So you know, if you really do want to work, I mean, I think you should feel pretty safe that you can come back. If you really, you know, as long as you stay disabled, you know. There's also a test program being tested right now with SSDI called the BOND program, where what they'll do is even after you become, so I'm working, my trial months are done, I'm receiving over, you know, $1,040, I'm no longer eligible for SSDI, but they want to give you another incentive, and that incentive is instead of taking your SSDI amount, let's say you're making $2,000 in SSDI, and just taking it all away for 1040, they're going to go what's called 2-for-1. So for every $2 above the 1040 you make, they're going to take $1 off of your SSDI amount. So if you're making $1,140, you're $100 over the amount you're allowed to make. So if you use the 2-for-1 rule, that you divide that by 2, it's $50. So you're receiving $2,000 in SSDI, you'll be receiving $1,950. So they're trying to create, and this is, there's about, I think, 50,000 people across the country who are part of this program, just being tested by the SSA, but people believe that it'll be, you know, fully available. You okay back there? Yeah. There's a belief that in the next 2 years, the BOND program will be part of SSA as well, which is just another incentive for you to try to go out and work with disability and still believe that you can, you know, because if you're going to be making $1,500 a month, and your SSI is $2,000 a month, why would you ever go back to work? You know, why would you do that? And the government's very aware of that. Or even, I'm going to work all month, I'm going to make $1,800, but I was receiving $2,000 SSDI. You know, what's my incentive? What's my real incentive to work? There is none. Why do I want to do that? So they're trying to create that added incentive to make you even make more money. You know, did I miss anything? Medicare, when you're on the, you know, when you're on SSDI, you receive Medicare. I think no matter what happens with your income, even if you're terminated, you can receive Medicare Part A benefits for like 10 years or something like 53 months or some really long number. They really have no intention to take away your Medicaid. They have no intention to take away your Medicare healthcare benefits. Even when the time comes where you're like 50 months expires, you can buy into Medicare at some reduced rate or something like that. They just want to be like, okay, you've been off SSDI for 5 years, you're making $300,000, at least pay us a premium. You know, that's the point of that program.
How do you get on that program?
It's just automatically part of you maintain your Medicare after your SSDI is terminated. So that's not even a program. That's just automatic that you have Medicare. After the 53 months or something like that, I don't remember what the exact number is, expires, it's something that the Social Security Administration just offers you. There's no name for the program. Yeah. You can just walk in there and tell them, listen, my 53 months expired, I have to pay a premium now, I've been doing this for so long, and they'll just work it out for you. There's no specific name for the program, it's just like a rule and reg. All right? So that's pretty much SSDI in a nutshell, although it didn't feel like one. There's a lot more to it. You know, I don't want to get into examples because I'll be here through tomorrow, but let's just, I'll leave it for Q&A as opposed to, you know, keep going. I mean, and you're all welcome to ask me more questions on SSDI. So the next thing I'm going to talk about is SSI.